Hello everyone, I am Divya Grover here to help you take informed mutual fund investment decisions. Investing in flexi cap funds is a great way to diversify your portfolio across market caps and potentially earn robust returns over the long run. Flexi cap funds have the flexibility to shift allocation between large cap, mid cap, and small cap stocks depending on the market conditions and valuations. This allows fund managers the scope to identify high potential opportunities from a large universe of stocks and better adapt to changing market trends. In this video, we will get to know in detail about Parag Parikh Flexi Cap Fund, a high conviction driven flexi cap fund that has benefited from high quality long term stock holdings. Launched in May 2013, Parag Parikh Flexi Cap Fund aims to identify fundamentally sound stocks through a bottom up approach. It prefers stocks trading at attractive valuations. As of June 2025, the fund had assets under management worth Rs 1104 billion, the highest among equity mutual funds. The fund is managed by Mr. Rajiv Thakkar, the CIO, Mr. Rukuntara Chandani, and Mr. Ronak Ankar, the head of research. Parag Parikh Flexi Cap Fund focuses on attractively priced stocks to reduce downside risk and benefit from the subsequent uptick in the market. The fund has the flexibility to invest across market caps. However, its portfolio usually tilts towards large cap stocks with tactical allocations in mid cap and small cap stocks. The fund also offers geographical diversification to its investors by holding a substantial portion of its assets in a few select global giants. Parag Parikh Flexi Cap Fund has high conviction in its stocks and prefers holding them with a long-term view even if the stocks are going through a difficult phase. The fund's portfolio turnover usually ranges between 20 to 25%, signifying low churning. Parag Parikh Flexi Cap Fund has consistently outperformed its benchmark and peers over the years. Over the last 3-year and 5-year periods, the fund has delivered returns at a CAGR of 20% and 27% respectively on a rolling returns basis. With this, the fund has outperformed its benchmark Nifty 500 TRI and has also outpaced most of its category peers. Even in the shorter 1-year period, the fund's performance is remarkable, highlighting its ability to do well over diverse time frames. Parag Parikh Flexi Cap Fund's standard deviation, that is volatility of 9.1%, is the lowest in the category and significantly below the benchmark and the category average of around 3.5%. The fund's Sharpe ratio of 0.53 and Sortino ratio of 1.2 are currently among the highest in the category and surpasses its benchmark. Clearly, the fund's large corpus has not hindered its performance, resulting in superior risk-adjusted returns. Parag Parikh Flexi Cap Fund holds around 50 to 60 stocks in the portfolio. However, this number has increased to 80 to 90 stocks in recent months, which can be attributed to its growing asset size. As of June 2025, the fund held 88 stocks with top holdings in HDFC Bank, Bajaj Holdings and Investment, and Power Grid Corporation of India. It allocated 11.1% in overseas equities, having invested in Meta Platforms, Microsoft Corporation, Alphabet Inc., and Amazon.com. In the previous month, the fund managers added fresh allocation to Zydus Wellness, while they exited Bharat Petroleum, Biocon, Birlasoft, HDFC Life Insurance Company, Hero MotoCorp, and REC. The fund's portfolio is dominated by banking and finance stocks, forming around 38% of its assets. Infotech, auto and auto ancillaries, power, mining, and FMCG are among the other core sectors in the portfolio. The fund usually maintains a large cap bias with some exposure to mid caps and small caps. As of June 2025, the fund has an allocation of 63.9% to large cap stocks, 2.3% to mid cap stocks, 2.7% to small cap stocks, 11.1% to overseas equities, and the balance in cash, debt instruments, and others. Parag Parikh Flexi Cap Fund has proved its resilience even during depressed market conditions. It has displayed its potential to generate steady growth over the long run. The fund has achieved this while keeping the volatility in check, resulting in superior risk-adjusted returns. Its bias towards large caps offers stability. Exposure to mid caps, small caps, and overseas stocks provides diversification. It avoids momentum driven investing and instead focuses on fundamentally sound stocks available at attractive valuations. The fund is led by a team of seasoned fund managers who prioritize risk management while seeking attractive investment opportunities. That said, the fund may witness muted growth when the market rally is driven by growth or momentum strategies. Please note that this video is for information purpose and does not constitute any kind of investment advice or a recommendation to buy, hold or sell a fund. Returns mentioned herein are in no way a guarantee or promise of future returns. For more guidance on mutual fund investments, subscribe to our YouTube channel. If you like this video, please give a thumbs up and share it with your friends and relatives. Signing off for now. Happy investing. Mutual fund investments are subject to market risk. Read all scheme related documents carefully. Registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.